Management at Hotel Leela Palaces now. Rajiv, Kaul, President at the Leela Palace Hotels and Rooms, is now joining us. Sir, most of the hotel companies are talking about an increase in the room rates by up to 20% as the season kicks off. Can you talk about what's the planning on the pricing?
You know, the hotels are a seasonal industry, so what happens is that all the leisure properties in the winter months will have a rate which would be maybe 50 to 100% higher than the summer tariff, than the summer rates. Whereas for city hotels, the seasonality is more a feature of days of the week. If you are comparing winter rates to summer rates, you will have an increase of well over 25%. But if you are comparing last year's winter rates to the coming year winter rates, I think maybe an 8 to 10% increase in tariff would be more realistic. We are still handicapped by a 28% GST, so that doesn't help matters. However, the rupee has depreciated by 13%, which would perhaps be a positive feature.
Right. As you said that, rupee has been depreciated. But, if you would look at the hotel industry back in 2011-12, there was a lot of expansion that happened all across the board, across industries. But in dollar terms, the rates have really not increased over the last 8-10 years. Do you expect that to go up?
It's a pity that the rates have been soft for such a long period of time. If you take a look at it, let's take the Delhi market. The Leela Palace, New Delhi, probably is the most expensive hotel in the city. So it does. Last year we did a rate in the winter months of approximately about 18 to 19,000 rupees. If you translate that into US dollars, it's a very modest $250.
Good afternoon, this is Leela from New Delhi. You were just talking about New Delhi, how you believe your Leela in the New Delhi is the most expensive hotel room-wise in RevPAR, etc. I wanted to ask you also a different question. With what's happening with the foreign exchange market, is that going to impact inbound tourism? You're coming across the heaviest tourist season now. We're not very far from that. It's wedding season, inbound traffic, the weather's going to get better across the country. Does it look like we're going to have a good season?
We're looking forward to a good season. I think the rupee depreciation is going to help. Will it help directly? Perhaps not. It'll be a trickle-down effect. See, a very, very promising feature is that the e-visa regime that has been started now with about 140 countries. So there are a number of late bookings that come in, and also it has given a fillip to short-haul traffic, as well as for MICE business, meetings, incentives, conferences and exhibitions, with India becoming a preferred destination for MICE. So I think the spurt in tourism is going to be in that segment. Also, you have a number of NRI weddings which will favor India more as a destination, because they are well aware that they are getting an economic benefit from devaluation of the rupee. So I think these are some of the segments which will perhaps be the engines of growth for us.
Mr. Kaul, before I let you go, I'm going to ask you two questions, and I'm going to cup them together because I think this is the kind of information the analyst community will want to know from you. Your existing shareholders will also want to know. With the rupee's depreciation, could we see hotel companies like yourselves maybe go back to the dollar billing? You're all switched to that. Would that be more beneficial? Is that something you're going to do which will have a positive impact maybe on the P&L? And second, any update you can give us on the debt overhang, the JM Financial debt that had been acquired, is believed to be in talks with Brookfield. You've tried to monetize a couple of assets. If you can give us an update on that front.
Well, the answer to your first question is that definitely time has shown that if we had a dollar denominated tariff, it would benefit the industry. So the industry is working on this initiative, and I hope we can succeed. It can't be done singularly. It's going to be there has to be a comprehensive agreement in the entire industry. As regards the other thing that you mentioned, it's correct. It's in the public domain. It was in yesterday's newspapers. We are working closely with JM Financial to find a solution, a comprehensive solution, and the enterprise that you mentioned is definitely one of them. Is one that we are working with. So stay posted, and we'll have news for you in a couple of weeks.
So, I just wanted to get a sense about the capacity in the industry. Maybe 2008 to 2015 saw some great additions of hotels, different brand coming into India, especially in the space that you operate in. But right now, the supply is limited and demand is growing well on a year-to-year basis.
So demand is healthy. It is growing. There's a double-digit increase in demand, and there is a single-digit increase in supply. Because of this, occupancies are hardening. Now, whenever occupancies harden, room rates follow. Today, occupancies are close to 70%, 70% levels in majority of the markets. So, therefore, we are hopeful that we should be able to this long-awaited room rate increase. We should be able to move faster on this and hopefully achieve about a 10% increase in the coming season. Supply is it takes 4 years to build a new hotel. So I think for the next 2 years, demand would outstrip supply in majority of the markets.
Rajiv, thanks so much for taking out time for us, telling us about the hotel industry, your transaction, if any, which goes through.